I want to start with the first name that I'll use is Elanco Animal Health. You say, Jeff, that you believe it has a similar opportunity to Zoetis, particularly when it comes to sort of, I guess, the adjusted EBITDA margin. Why do you believe that to be the case?
Yeah, first of all, thanks for having me. It's nice to be here in person.
Good to have you.
It's been a while, and it's nice to be back doing business in person.
Yeah.
So Elanco, yeah, we've been in and around Elanco for a while. We've known the company for a while. We've had an investment in the company. It was rumored, but we never said anything about it for the last year, and we've recently increased our position dramatically. There's an opportunity. You know, the company came public, spun out of Eli Lilly years ago, and there was a lot of hope that they were going to be able to follow the blueprint of Zoetis, that they were going to be able to dramatically improve their margins. It's a great business. It's animal health and in both pets as well as farm animals, and that they could improve their margins. Unfortunately, it's, you know, been a bunch of false starts. Mm-hmm. But they did a merger recently, or closed a merger recently with Bayer Animal Health, which gives them more scale. We believe the market's been disappointed by the execution as it relates to that, because they initially said they were going to get to 31% margins in 2023. Then when they did the merger, they said this speeds things up and we can get there by 2022. And then after the deal closed, they then said 2024. But that's water under the bridge. We don't care about that. We weren't really investors as it relates to that. We look at it today and we say we get to buy into this company, great business, at roughly the same value as when it spun out and came public, except it's a much better positioned company. We think it's set to succeed.
Yeah.
We need to see the execution follow the promise.
All right. Well, when you say, unfortunately, execution has disappointed and credibility has eroded, given you are an activist investor, that makes me think that this may be a situation where you're not just paying close attention, but you might do something down the road. Is that true?
Yeah, we've had conversations, again, off and on with them for a while. We debated whether we should nominate directors last year. We had conversations with the board. We had conversations with management. We agreed that we should give them a little more time and see the execution. That execution hasn't yet developed again. So we've ramped up our position. We've ramped up the conversations. I had a conversation with the board a few weeks ago and went through a very similar presentation to what I presented today at the conference, just to make sure everybody's level set. There are board members on the board that were put on the board recently by Sachem Head.
Yep.
We want to make sure the whole board understands the opportunity, which I believe they do, but also understands that it hasn't played out yet, that it's been slower than the market expects, that even though there are reasonable reasons, if that's a thing to say,
yes.
Why it's taking longer, that we also need to demand accountability, not only for the shareholders, but also for the employee base, for the customers. The company can do better, and we believe it should do better. And during this period of time,
well, what do you need as a sign that they are? And, you know, because you're always operating, certainly with certain nominating windows and periods of time in which you want to act. So how does that work from your perspective?
You know, we need to see progress against the goals, and the most meaningful goal is EBITDA margin. There's a huge gap between them and Zoetis. During COVID, you might say, well, this was a harder time, except Zoetis was able to expand their margins, so the gap has even grown more. The company's promised 300 basis points of margin expansion this year. We need to see them execute. We need to see them be along that path. And as we said to them, do better. You know, if you come out with 300 basis points, beat that. Do more and sooner as opposed to less and slower. And hopefully they can do that. Nothing would make us happier. We just want the company to succeed. That's what we're looking for.
Understood.
Shepard Smith here. Thanks for watching CNBC on YouTube.